Man, I'm just gonna do a manufacturing breakdown or summary, and just to show you what the whole manufacturing process is all about. An example here will be us manufacturing a table. So what raw materials would you need to manufacture a table? The biggest raw material there will be wood, which is just logs. So what makes up these raw materials? Obviously, some of the logs we were not used last year, so we will add them when we calculate the cost of raw materials or raw materials that will be taken to production. Then you are going to add any raw materials that you bought. It can be on credit, it can be for cash, and then you minus any returns or damaged raw materials. You will also add carriage inwards, that is transportation costs that you paid to bring the raw materials to the factory so that manufacturing can take place. If that raw materials or those raw materials were purchased overseas, you will add tax on the cost price, which we refer to as a custom duty. Then you will subtract raw materials that were not issued or that are still in the warehouse and are not in the manufacturing process. You will minus those and you will be left with raw materials that will be taken to production, issued to production. Now, with raw materials only, you cannot have a finished product. So you will need someone to convert these raw materials into finished products. And the person that is directly involved in making that um, product, we call them direct labor. So what makes up direct labor? So you will add all the direct labor costs, and that includes the employee's gross salary or wage. Then you will add any bonus. Then you will add overtime as well as employers' contributions. These are just additional costs that you will have to incur as the employer to contribute to whatever aid or fund the employee belongs to. Now, when you add direct material and direct labor, you will get what we call primary cost, abbreviated as prime cost. Now that you have your prime cost, we spoke about our prime cost made up of direct material as well as direct labor. So those are our prime costs. And one thing that we haven't added are simply other costs that are also incurred in order to make a product. And those other costs will be things like your factory overheads. What makes up factory overheads will be indirect labor, which is people that will normally supervise at the factory. We're talking about your factory supervisor, factory foreman, or the factory manager, or factory accountant, or factory receptionist. All those people that are employed at the factory, we will only include the cost of employing them in the indirect labor costs. So what are these costs specifically? They are pretty much similar to direct labor costs, which is the gross wage or salary of that factory supervisor. Then you are going to add bonuses. If you are paying them bonuses, you're going to add overtime paid if you are paying them overtime and any contributions that you make as the employer. Then you will add what we call direct, indirect materials. So indirect materials are materials that are involved in a part of manufacturing a product, but cannot be directly traced to that product. So when we talk about indirect material, it can be paint, it can be glue that you can see, it can be okay, I don't know if I will include screws there as well as indirect. I think those will be under direct. Now, all the indirect material used in manufacturing a product, just to finish it off in most cases, will be included there as indirect material. So indirect materials that are included here, so there's a formula for that as well. You're gonna have opening balance of indirect materials at purchases of indirect materials minus returns of indirect materials to the supplier, and then your minus the cost price of indirect materials that was not used. Then you will have the cost of indirect materials. That's the one that you are going to add here. Then other things will be, we cannot produce those tables without water and electricity, but you only look at water and electricity for the factory. And you will include things like rent for the factory or any depreciation of the asset that was used to make that product. And obviously, that's why I said depreciation for the factory assets. You need to be careful. And when you combine these two, you will get what we call total manufacturing cost, or basically total production cost, or total, yeah, that's what it is. So I normally call it TMC, which is total manufacturing cost, or TPC, which is your total production cost. So when you add your direct, your prime plus your factory overheads, you will get your total production cost. And to this total production cost, which is your total production cost, when you add your total production cost with work in progress at the beginning of the year. Work in progress, it's simply those tables that were not finished last year. And then you minus the tables that were not finished this year. You will end up getting what we call a finished product. Okay, so what is this finished product exactly? The finished product will be the table that you are manufacturing. Okay. Now, with your finished product as well, you can use this to calculate cost of sales. So you look at finished products that were not sold last year, add the ones that were produced this year, which is your total manufacturing cost for this year. Then you minus finished products that were not sold at the end of this year. You will get what we call cost of sales, which is cost of goods or cost of tables that were actually sold. That's it. Okay. Basically, your manufacturing, as I've said, will start with your direct material from the previous year. Then you add your purchases plus it's cash plus credit purchases minus your returns or damaged raw materials. You add your carriage, which is just transports incurred to bring the raw material to the factory. And then you add any import duties, you minus raw materials that were not used at the end of this year. They were not used, so they won't be part of the production process, okay? Since they were not used, they will not be part of the production process, or that's why we actually subtract them. Then whatever you get after subtracting those closing raw materials, you will get what we call raw material cost, which is just raw materials issued to the production process. So these ones are taken to production process, okay? So we are going to convert these ones into finished goods. But before we can convert them into finished goods, we need labor, right? Direct labor, people that are directly involved in converting those raw materials into finished goods. Now we'll take their gross salary, which can also, gross salary is not the same as a basic salary. I need you to understand that a basic salary is basically the rate, the actual rate that we pay the employee. This is before deductions. That's what a gross salary is. It's before deductions. And then the rate that you actually pay the employee, when you include things like your car allowance, cell phone allowance, all of those things, they'll make up what we call gross salary. Okay. Then we're going to have overtime payments as well as bonuses. Most of the time, overtime payments plus bonuses make up what we call the gross salary. Bonus, we normally refer to it as the 13th check. Then you add the employer's contributions. Then you will get what we call the cost of labor involved in producing the product. This cost of labor, we need to add it to the cost price of the product being manufactured, right? Lastly, we are going to include factory overheads, which is, I told you, for indirect material, you'll have opening balance plus purchases of indirect material minus returns of indirect material, and then you minus the closing balance of indirect material. For your direct labor, you will have your indirect labor cost, which involves your gross salary and the employer's contribution, bonuses, as well as overtime. Okay, then you are going to have rent expense only for the factory, only the one that relates to the factory. water and electricity that belongs to the factory, we incurred for the factory, insurance for the factory. So everything here must be for the factory, depreciation of asset used at the factory. And you'll have things like your Wi-Fi used at the factory, security costs for the factory, all of those will be under factory overhead. Sometimes they'll tell you that when we were during the production process, there were materials that were lost, like raw materials that were lost or were damaged, then we need to include those under factory overhead. So you will include them here as well, okay? The cost of those damaged goods. As I've said, when you take your direct material cost, you add it with your direct labor cost, you will get your prime cost. When you take your prime cost and you include factory overheads, you will get TMC or TPC, which is your total production cost or total cost of production. Then you add work in progress at the beginning of the year, then you minus work in progress at the end of the year. That'll give you cost of produced items, of which you will use this to calculate cost of sales. So you will take opening stock of finished goods and your purchases, all right? In this case, your purchases is what you have manufactured, which is the total that you got from your production cost statement, okay? So that's 9,700,000 comes from here, okay? And then you will subtract the value of your closing stock to determine cost of sales. They try by all means to twist this. They will normally not give you that 9,600 and not give you that manufacturing cost of finished goods. And without those two, so for instance, if I don't have cost of finished goods, I can't calculate manufacturing cost of finished goods. If I don't have manufacturing cost of finished goods, I can't calculate cost of finished goods. So what they normally do is that they will give you a sales value. And then after they've given you that sales value, they will give you the markup. So you will need to use that sales value to calculate cost of sales. And once you get that cost of sales amount, you will put it here, okay? Once you have put it here, you will use the reverse principle. So basically you will just add this. So basically you will take this 9,600,000, add your closing stock and minus your opening stock, and then you will get this one over here. And when they want you to calculate this, it's because you'll find that in your production cost statement, there's something they left out. Probably they can leave out this factory overheads. This is just an example. So without factory overheads, you can't calculate that, okay? So now you don't have this. So you calculated it from the previous cost of sales node. Then once you have this, you'll be able to calculate that. And once you have this, you just subtract this reverse operation, you subtract this, and then it'll give you that. Once you have this, you just take this and you subtract your prime cost, then you will get your factory overheads. So they'll just try to trick you, but they're just working with, once you know what you're doing, it'll be quite easy for you to get things. Now, one question I also love asking is calculate the cost of production per unit. And I don't know what kids are doing. All you have to do is just to take whatever you get, that 9,700,000, and then you divide it by the number of units produced. That's it. That's all you have to do. Okay. This is just a summary of your production cost statement. If you want to apply this, you can actually try out this example over here. Use it to prepare your raw material cost note. Direct labor note. Factory overheads note. And your production cost statement. I need to include cost of sales as well. Okay, you can actually use those notes to prepare those three, right? That is just a quick summary. I actually gave the summary to my grade 11s and they just worked with it. You just worked with it. Once you understand the summary, you'll be able to calculate anything. You'll be able to answer any question relating to manufacturing. Right, that's it for now. Khoto.